Hello, traders. Welcome back to our weekly market outlook. I'm Mr. Waz from Forex SPV, and as always, every week beginning, we break down key market setups so that you're prepared ahead of the new trading week. So, before I go deep into the analysis this week, uh, on Friday, we had the Jackson Hole Simpson Day, but also we had Powell having a speech. So Powell just shook the market at the Jackson Hole on Friday, and the reaction was immediate. Stocks went up, yields were down, and the dollar weakened. So we noticed USD selling heavy, EURUSD buying heavy, gold. So let's break down what he said and what this means for the current markets going forward. So first of all, Powell signaled a clear dovish tilt. He emphasized that risks are now leaning towards weakening the labor market than run away from inflation. And that tells us that the Fed is preparing to cut interest rates, possibly as soon as September, but it does not confirm that this will be a trend. So just simply rate cut on September. And secondly, the Fed reset its framework, moving away from the old makeup inflation strategy back to flexible inflation targeting. So in simple terms, they're stepping back to a more traditional policy stance. And finally, Powell stressed balance. Policy will remain data-driven, carefully weighing inflation risk against the slowdown in jobs. So the Fed is not just going to the old makeup inflation strategy, but the policy for the inflation will be more data-driven. So they weigh the inflation risk against the job market. The reaction was very fast on Friday. That was the immediate market reaction, where we saw that the US dollar dropped, showing weakness across the board. We also saw other currency pairs moving, and equities actually went up with the Dow Jones going up, Nasdaq, and the rest of the American indices. This is the classic dovish Fed reaction. So cheaper yield, weaker dollar, and stronger risk asset. So what does this mean for currencies? The USD is likely to stay under pressure in the near term, especially if the Fed follows this cut rates, the rate cuts on September. Euro and pounds may gain ground against the dollar, and we have seen pounds going up. Even pound card went up on Friday. Emerging market currencies, including those in Africa, could see inflows of investors chase higher yields outside the US. And we have clearly noticed in the DSC market right now here in Tanzania, we have seen an influx of foreign investors compared to other years where we have elections. So this year we have elections, and we're expecting for the market to liquidate. But then the foreign investors are coming in, and it's different this year compared to other years where we have elections. So with the current USD weakening, we can also expect for more inflows of investors who are chasing this higher yield. Meanwhile, the safe haven currencies like the Swiss franc, the Japanese yen may lose momentum as risk appetite returns. So in summary, Powell message was clear. The Fed is preparing to ease. For traders, this sets up a softer dollar environment, potential strength in euro, pound, and emerging markets, and a shift in momentum across the FX pair. So you should be expecting that. So we need to keep a close eye on the September's FOMC meeting. That's where the market will either get confirmation of the rate card or the reality check if data shifts the Fed stance. So let us now go back to the market. So I'll be analyzing the same pairs we've been following: EURUSD, Gold, GBPCAD, EURJPY, and USDZAR. So let us start real quick with Euro USD. So we start with the monthly time frame, looking at the market structure. And the market structure is bullish here. You can see it's still bullish, showing a very strong bullish momentum. And when we look at the market structure, we're looking at areas of support and resistance that are close to the current market price. And the market has been going up. We have seen a retracement coming back to the 200 EMA. And right now, according to this month candle, we can see the market is still going up. But mind you, this is the last week of August. So here we have the weekly time frame. And when you look at it, the market is formed like a support here, but then we have a resistance here. So it's bounded around this area, and if the market structure stays bullish, then we should be expecting for the market to break out and continue going up. And when you look at the daily time frame, this month started with a bullish candle right after this doji, then we had the market going up, and right now the market has bounced around the 50 MA, indicating peak reset on the lower time frame. So here we have shark screen around the level middle. So this is a peak reset, and therefore we should take this as a reset. Well, when you look at liquidity, we're seeing these are highs, and the market simply, after breaking this low, the market went up and did break this high. And when you look at this structure, the market had a retracement up. I mean, like a consolidation. So we have like 1, 2, and 3 moves. So as for today, the market would correct. So as for today, the market should correct big. So you should be looking for sales on Euro USD. And that is a temporary sell. That will also be a weak beginning false move. But then the overall trend in the market maker cycle is bullish. It's still bullish. Let us now draw the ADR boxes. So it moved 2 times ADR on this news. So that was a very big move. That was a very big move on Friday. So the market should correct big right now. And this here is a whole liquidity area. If the market corrects big, then we can expect it to come to this level here. Come all the way down to this level. But as for now, your first target should be this EMAs here. So this EMAs, so the market simply breaks this and had a retest here. So if it retraces, it will come back to this breaker. It will come back to this breaker, and then continue going up. So if it gives you a pattern around this area, it's a good sell for you. Temporary one. Okay, so let's go to EURJPY. So EURJPY, this is one of the pairs we have been following. And according to the monthly time frame, this pair had reached this area of resistance, and it still remaining there for a couple of weeks. And here we had a very strong support. The market is moving up. And we are now at a resistance area. And you're seeing here, it has remained on this area for quite a long time. Because this area is also a high of previous year. So the high of 2024, basically, it's the highest point reached by price so far on EURJPY. So price has remained confined within that area, indicating signs of weakness, and that can simply mean that the market might be forming a peak to go down. So if the market is forming that peak, then that should be our anticipation on the long-term look. So that is our anticipation on long-term look. But then as for now, if you're trading EURJPY, you should be looking for buys towards that high, towards that high. So in lower time frame, you can be looking for buys towards that high. So this here can be a peak. This is a peak, and we are now still going up. So if you'll be looking for buys, if the market retraces, then it should break this low, come all the way towards yesterday's low. And then continue going up. So your entry might be around this pivot. So if the dealer gives you a pattern around this pivot or around the yesterday's low, then that's a good entry for you. Now let us go to GBPCAD. So we have been following this pair for a while now, and GBPCAD was bullish and is still bullish, still remains bullish. This here is a consolidation. This here is a consolidation forming like a rectangle pattern, and then you can see how the market is now strong going up. This is the daily time frame. You can see the consolidation here, and price I mean, if you look at the TDI here, the TDI has come all the way to the level middle, and it has formed a W and it's showing that it's going up. So that means we are having a peak reset. That means we're having a peak reset around this area. And if you take a trade here, your first target should be this area, the large quarter point, which is bounded around this consolidation zone. So if it breaks that zone, then the market will continue going up in a very strong momentum, and that is our anticipation. So for now, you're looking for buys to that point, to that large quarter point, and if price retraces and breaks this Asian low, comes all the way towards previous day New York low, then there is our entry. There is our entry. So let us go to USDZAR. So on the last week, I've been following USDZAR, but then you can see from Monday. So my anticipation was for price to come to this point and take a sell out of it. But you see from Monday, the market was simply very choppy, and it came to move on Friday. So this was a very bad market for me for last week on USDZAR. But then the dollar is very weak, and This is an emerging market for the forex market. And you can see here the market structure is showing a strong sell here. So a very strong bearish market structure. We are now targeting that low. We are now targeting that area of support. And you can see even on the weekly time frame, the market structure is showing to be very strong going down. On the daily, this here is a peak reset. And on the hour, the TDI has showed a peak reset and we are still going down. However, we should have a retracement. And where could this retracement go? So where could this retracement go? So we're having these zones, yeah. This allows for previous days, yeah. So these are all areas of liquidity, yeah. So these are all areas of liquidity, and here we have a fair value gap. So we only have one side of liquidity on this area. So if it retraces, then this should be our target here. This should be a target, and therefore a buy trade here is also a good trade to take. Yeah? But then this is a peak reset as for now. So the overall market structure is bear. I mean, the overall market maker cycle is bearish, even the market structure. So this here is a temporary buy for you. Yeah? This is a temporary buy, and you should be looking for sales once price reaches that area or any area of liquidity and gives you a pattern that we have drawn here. Okay, so let us finish real quick with gold. So gold has been on a consolidation based on the daily time frame. So this here is a range bound market. So it is simply going to this high and going to this low. And the market structure is still bullish. We've seen these peaks, but then people are still seeing gold as a safe haven asset and as a potential to go up. So the market structure is still bullish. This is the daily time frame. You can see it has bounced around the 50 MA, and that indicates that we are still going up. So the shark fin for the peak was here. The market has moved level 1, level 2, and we can expect for a third level. Okay, so this here is our peak. Very good at the shoulder pattern. So our ADR is around 358. We are going for second ADR and the third ADR. So as for now, the market would retrace to this point as a false move week beginning, and then we should take our buy trades. Yeah. So that is all on the analysis for this week. You should also be keen with other currency pairs as the market had moved big on Friday. So a shift in momentum, a shift in trend would occur on this week. So if you're part of the signal group or the mentorship group, there is where we take action. But even if you're not, I hope this gives you clarity for your trades this week. Don't forget to like, drop a comment below, and subscribe if you haven't already. And if you want to join any of our program or training or signal services, you can simply text me on WhatsApp, on Telegram, or on Instagram. Otherwise, see you next week. Have a profitable trading week. Thank you.